The economy of the Philippines is the 40th largest in the world, according to 2013 International Monetary Fund statistics, and is also one of the emerging markets in the world. The Philippines is considered as a newly industrialized country, which has been transitioning from being one based on agriculture to one based more on services and manufacturing. According to the World Bank ICP 2011, the estimated 2011 GDP was $543.7 billion. Goldman Sachs estimates that by the year 2050, the Philippines will be the 14th largest economy in the world. Goldman Sachs also included the Philippines in its list of the next 11 economies. According to HSBC, the Philippine economy will become the 16th largest economy in the world, 5th largest economy in Asia and the largest economy in the Southeast Asian region by 2050. Primary exports include semiconductors and electronic products, transport equipment, garments, copper products, petroleum products, coconut oil, and fruits. Major trading partners include the United States, Japan, China, Singapore, South Korea, the Netherlands, Hong Kong, Germany, Taiwan, and Thailand. The Philippines has been named as one of the Tiger Cub economies together with Indonesia, Malaysia and Thailand. It is currently one of Asia's fastest-growing economies. However, major problems remain, mainly having to do with alleviating the wide income and growth disparities between the country's different regions and socio-economic classes, reducing corruption, and investing in the infrastructure necessary to ensure future growth. Macroeconomic trends. The Philippine economy has been growing steadily over decades, and the International Monetary Fund in 2011 reported it as the 45th largest economy in the world. However, its growth has been behind that of many of its Asian neighbors, the so-called Asian tigers, and it is not a part of the group of 20 nations. Instead, it is open grouped in a second tier of emerging markets or of newly industrialized countries. Depending upon the analyst, this second tier can go by the name the next 11 or the Tiger Cub economies. In the years 2012 and 2013, the Philippines posted high GDP growth rates, reaching 6.8% in 2012 and 7.2% in 2013, the highest GDP growth rates in Asia for the first 2 quarters of 2013, followed by China and Indonesia. A chart of selected statistics showing trends in the gross domestic product of the Philippines using data taken from the International Monetary Fund. GDP growth at constant 1985 prices in Philippine pesos, composition by sector. As a newly industrialized country, the Philippines is still an economy with a large agricultural sector. However, services have come to dominate the economy. Much of the industrial sector is based on processing and assembly operations in the manufacturing of electronics and other high-tech components, usually from foreign multinational corporations. Filipinos who go abroad to work are known as overseas Filipino workers or OFWs are a significant contributor to the economy but are not reflected in the below sectoral discussion of the domestic economy. OFW remittances is also credited for the Philippines' recent economic growth resulting to investment status upgrades from credit ratings agencies such as the Fitch Group and Standard & Poor's. Agriculture. Agriculture employs 32% of the Filipino workforce as of 2013, according to World Bank statistics. Agriculture accounts for 12% of Philippines' GDP as of 2013, according to the World Bank. The type of activity ranges from small subsistence farming and fishing to large commercial ventures with significant export focus. The Philippines is the world's largest producer of coconuts, producing 19,500,000 tons in 2009. Coconut production in the Philippines is generally concentrated in medium-sized farms. By 1995, the production of coconut in the Philippines had experienced a 6.5% annual growth and later surpassed Indonesia in total outputs in the world. The Philippines is also the world's largest producer of pineapples, producing 2,198,000 metric tons in 2009. Rice production in the Philippines is important to the food supply in the country and economy. The country is the 8th largest rice producer in the world, accounting for 2.8% of global rice production. The Philippines was also the world's largest rice importer in 2010. Rice is the most important food crop, a staple food in most of the country. It is produced extensively in Luzon, the Western Visayas, Southern Mindanao, and Central Mindanao. The Philippines is one of the largest producers of sugar in the world according to Food and Agriculture Organization of the United Nations Statistics Division. At least 17 provinces located in 8 regions of the country have grown sugar cane crops, of which Negros Island accounts for half of the county-Euro unregistered trademark's total production. As of crop year 2012 to 2013, 29 mills are operational divided as follows: 6 mills in Luzon, 13 mills in Negros, 4 mills in Fanao, 3 mills in Eastern Visayas and 3 mills in Mindanao. A range from 360,000 to 390,000 hectares are devoted to sugarcane production. The largest sugarcane areas are found in Negros, which accounts for 51% of sugarcane areas planted. This is followed by Mindanao, which accounts for 20%. Luzon, 17%. Fanao Islands, 7% and Eastern Visayas, 4%. Shipbuilding and repair. The Philippines is a major player in the global shipbuilding industry with shipyards in Subic, Cebu, General Santos City and Batangas. It became the 4th largest shipbuilding nation in 2010. Subic-made cargo vessels are now exported to countries where shipping operators are based. South Korea's Hanjin started production in Subic in 2007 of the 20 ships ordered by German and Greek shipping operators. The counter-Euro unregistered trademark shipyards are now building ships like bulk carriers, container ships and big passenger ferries. General Santos Shipyard is mainly for ship repair and maintenance. Being surrounded by waters, the country has abundant natural deep-sea ports ideal for development as production, construction and repair sites. On top of the current operating shipyards, 2 additional shipyards in Misamis Oriental and Cagayan Province are being expanded to support future locators. It has a vast manpower pool of 60,000 certified welders that comprise the bulk of workers in shipbuilding. In the ship repair sector, the Navotas complex in Metro Manila is expected to accommodate 96 vessels for repair. Automotive. The ABS used in Mercedes-Benz, BMW, and Volvo cars are made in the Philippines. Ford, Toyota, Mitsubishi, Nissan and Honda are the most prominent automakers manufacturing cars in the country. Kia and Suzuki produce small cars in the country. Isuzu also produces SUVs in the country. Honda and Suzuki produce motorcycles in the country. A 2003 Canadian market research report predicted that further investments in this sector were expected to grow in the following years. Toyota sells the most vehicles in the country. By 2011, China's Tri Automobile Company is going to build their assembly plant in Laguna, that will serve and export cars to other countries in the region if monthly sales would reach 1,000 units. Automotive sales in the Philippines moved up from 165,056 units in 2011 to over 180,000 in 2012. Japan. A Euro unregistered trademark automotive manufacturing giant Mitsubishi Motors has announced that it will be expanding its operations in the Philippines. Aerospace. Aerospace products in the Philippines are mainly for the export market and include manufacturing parts for aircraft built by both Boeing and Airbus. Moog is the biggest aerospace manufacturer with base in Baguio in the Cordillera region. The company produces aircraft actuators in their manufacturing facility. In 2011, the total export output of aerospace products in the Philippines reached $3 billion. Electronics. A Texas Instruments plant in Baguio has been operating for 20 years and is the largest producer of DSP chips in the world. Texas Instruments' Baguio plant produces all the chips used in Nokia cell phones and 80% of chips used in Ericsson cell phones in the world. Until 2005, Toshiba laptops were produced in Santa Rosa, Laguna. Presently the Philippine plant's focus is in the production of hard disk drives. Printer manufacturer Lexmark has a factory in Mactan in the Cebu region. Mining and extraction. The country is rich with mineral and geothermal energy resources. In 2003, It produced 1931 MW of electricity from geothermal sources, second only to the United States, and a recent discovery of natural gas reserves in the Malampay oil fields off the island of Palawan is already being used to generate electricity in 3 gas-powered plants. Philippine gold, nickel, copper and chromite deposits are among the largest in the world. Other important minerals include silver, coal, gypsum, and sulfur. Significant deposits of clay, limestone, marble, silica, and phosphate exist. About 60% of total mining production are accounted for by non-metallic minerals, which contributed substantially to the industry's steady output growth between 1993 and 1998, with the value of production growing 58%. In 1999, however, mineral production declined 16% to $793 million. Mineral exports have generally slowed since 1996. Led by copper cathodes, Philippine mineral exports amounted to $650 million in 2000, barely up from 1999 levels. Low metal prices, high production costs, lack of investment in infrastructure, and a challenge to the new mining law have contributed to the mining industry's overall decline. The industry rebounded starting in late 2004 when the Supreme Court upheld the constitutionality of an important law permitting foreign ownership of Philippines' mining companies. However, the DENR has yet to approve the revised department administrative order that will provide the implementing rules and regulations of the Financial and Technical Assistance Agreement, the specific part of the 1994 Mining Act that allows 100% foreign ownership of Philippines' mines. Offshoring and outsourcing. According to an IBM Global Location Trends annual report, as of December 2010 the Philippines has surpassed India as the world leader in business process outsourcing. The majority of the top 10 BPO firms of the United States operate in the Philippines. Total jobs in the industry grew to 100,000 and total revenues were placed at $960 million for 2005. In 2012, BPO sector employment ballooned to over 700,000 people and is contributing to a growing middle class. BPO facilities are located mainly in Metro Manila and Cebu City, although other regional areas such as Baguio, Bacolod, Cagayan de Oro, Clark Freeport Zone, Dagupan, Davao City, Legazpi, Dumaguete, Lipa, Iloilo City, and Camsur are now being promoted and developed for BPO operations. Call centers began in the Philippines as plain providers of email response and managing services and is now a major source of employment. Call center services include customer relations, ranging from travel services, technical support, education, customer care, financial services, online business to customer support, and online business to business support. Business process outsourcing is regarded as one of the fastest growing industries in the world. The Philippines is also considered as location of choice due to its many outsourcing benefits such as less expensive operational and labor costs and high proficiency in spoken English and highly educated labor pool. In 2011, the business process outsourcing industry in the Philippines generated 700,000 jobs and some $11 billion in revenue, 24% higher than 2010. By 2016, the industry is projected to reach $27.4 billion in revenue with employment generation to almost double at 1.3 million workers. BPOs and the call center industry in general is also credited for the Philippines' recent economic growth resulting to investment status upgrades from credit ratings agencies such as Fitch and S&P. Regional accounts, gross regional domestic product is GDP measured at regional levels. Figures below are for the year 2013. Note green-colored cells indicate higher value or best performance in index, while yellow-colored cells indicate the opposite. Economic indicators and international rankings. Statistics. Most of the following statistics are sourced from the International Monetary Fund, Philippines. GDP, purchasing power parity, $416.721 billion, GDP, real growth rate, 6.6%, GDP per capita purchasing power parity, $4,263.689, GDP nominal, $240.664 billion, GDP per capita, $2,462.354, GDP, composition by sector, agriculture 12.3%, industry, 33.3%, services, 54.4%. Population below poverty line, less than $1.25/10.41%, less than $2/25.2%, 26.3%, 32.9%. Household income or consumption by percentage share, lowest 10% 2.4%, highest 10% 31.2%. Inflation rate, 3.9%, 5.3%, 3.5%. Labor force, 39.81 million, labor force by occupation, agriculture 33%, industry 15%, services 52%. Unemployment rate, 7.5%, 7.5%, 6.9%, 7.2%. Budget, revenues $40.43 billion, $31.99 billion, expenditures, $44.29 billion, $36.71 billion. Foreign reserves, $81.90 billion US dollars, industries, electronics assembly, garments, footwear, pharmaceuticals, chemicals, wood products, food processing, petroleum refining, fishing, industrial production growth rate, 12.1%, electricity, production, 59.19 billion kilowatt-hour, electricity, consumption, 54.4 billion kilowatt-hour, electricity, exports, 0 kilowatt-hours, electricity, imports, 0 kilowatt-hours, agriculture, products, sugarcane, coconuts, rice, corn, bananas, cassavas, pineapples, mangoes. Pork, eggs, beef. Fish, exports, $53.98 billion, $54.17 billion. $69.46 billion, exports, commodities, semiconductors and electronic products, transport equipment, garments, copper products, petroleum products, coconut oil, fruits, exports, partners, China 19%, United States 13.4%, Singapore 13.2%, Japan 12.8%, Hong Kong 7.6%, Germany 4.2%, South Korea 4.1%, imports, $61.831 billion, $68.84 billion, imports, commodities, electronic products, mineral fuels, machinery and transport equipment, iron and steel, textile fabrics, grains, chemicals, plastic, imports, partners, Japan 14.1%, China 13.6%, United States 9.9%, Singapore 9.3%, Thailand 6.5%, South Korea 5.6%, Indonesia 4.1%, debt, external, $62.41 billion, currency, 1 Philippine peso equals 100 centavos, exchange rates, Philippine pesos per US dollar $42.45, 42.43, 43.44, 45.11, 47.68, 44.439, 46.148, 51.246, 55.086, government budget. The national government budget for 2012 has set the following budget allocations. Noticeably enough, the Department of Science and Technology is not reflected in the chart below, which underlines the Philippine government's need to invest more on education, particularly in the sciences and engineering fields, to solidify its current growth momentum. See also: List of companies of the Philippines, Next 11, Tiger Cub economies, newly industrialized countries, Economy of Asia, emerging markets, Bamboo Network, references. Further reading: Balisacan, Arsenio. Hal Hill. The Philippine Economy, Development, Policies, and Challenges. New York, Oxford University Press. PA 496. ISBN A978-0-19-515898-4. Balisacan, Arsenio. Hal Hill. The Dynamics of Regional Development, the Philippines and East Asia. Cheltenham, UK, Edward Elgra, Bagwati, Jagdish and Dan Kruger. Foreign Trade Regimes and Economic Development. National Bureau of Economic Research. Kang, David C. Crony. Capitalism or Euro Corruption and Development in South Korea and the Philippines. Cambridge University Press. ISBN 978-0-521-00408-4. Villegas, Bernardo. The Philippine Advantage. Manila, University of Asia and the Pacific. State of the Philippine Islands, a book written by a Spaniard during the early 19th century that studies the economic conditions of the Philippines, which was then a colony of Spain. An online book published by Filipiniana.net. External links: Bangko Sentral ng Pilipinas, National Statistical Coordination Board, Department of Trade and Industry, Department of Finance, Philippine Stock Exchange, National Federation of Sugarcane Planters, Department of Tourism, Philippines Business Brokers, Philippine Economic Zone Authority, Philippines 8th Regular Foreign Investment Negative List, Trade, World Bank Summary Trade Statistics Philippines 2012.